Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ocumension Therapeutics annual report. Ocumension Therapeutics is a leading ophthalmic pharmaceutical platform company in China that offers a wide range of treatments for various eye conditions. Their portfolio includes therapies for chronic non-infectious uveitis, infective and allergic conjunctivitis, diabetic macular edema, dry eye, glaucoma and ocular hypertension, postoperative inflammation, choroidal neovascularization, bacterial conjunctivitis, retinitis pigmentosa, age-related macular degeneration, cornea graft rejection, myopia, and optic neuritis. The company's services cater to the needs of ophthalmic patients in China, providing them with effective treatments for a variety of eye conditions. With its extensive portfolio, Ocumension Therapeutics has established itself as a prominent player in the Chinese ophthalmic pharmaceutical market. Ocumension Therapeutics' market capitalization of $7 billion is materially smaller than most of its industry peers of roughly $31 billion. Ocumension Therapeutics trades at a lower price-to-book ratio of 1.63 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 5% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth and decline are multifaceted and influenced by various factors. On the growth side, sales of ophthalmic products have been a significant contributor, with notable increases in sales-based royalty, income from commercialization of Biojing and core product Yaoxing playing a pivotal role in the company's growth strategy. Expansion into the in-hospital market and rapid growth of new products, such as Cysteine Ultra and Tears Naturel Forte, have also driven revenue growth. Furthermore, strategic cooperation agreements with key partners like Shanghai Pharmaceuticals Holdings Co., Limited, have contributed to increased market share in antiallergic and glaucoma fields. The company's gross profit has also seen a significant increase of 60.4% from RMB 100 and 25.1 million to RMB 300 and 60.9 million. On the other hand, revenue decline is primarily driven by a decrease in pharmaceutical products promotion services, which saw a drop of 65.14 RMB 0. This decline highlights the importance of diversifying revenue streams and adapting to changing market conditions to mitigate potential losses. Net income experienced a significant turnaround in 2025. Initially, the adjusted net loss narrowed by 51.1% from RMB 100 and 83.6 million to RMB 89.9 million. However, this trend reversed with a year-on-year increase of 92.7%. The net income jumped from RMB 400 and 17.3 million in 2024 to RMB 800 and 4.4 million in 2025. The improvement in net income can be attributed to several factors. Firstly, the approval and marketing of new products such as Biojing and OT-202 contributed to revenue growth. Additionally, the completion of capacity upgrades enabled enhanced supply chain self-sufficiency and control, leading to reduced product costs through economies of scale. Profit margins also showed a positive trend in 2025. The comprehensive gross profit margin remained stable at approximately 44.9%. Furthermore, non-IFRS adjusted EBITDA turned positive in 2025, indicating improved profitability. These developments suggest that the company's efforts to optimize operations and expand its product offerings have yielded favorable results. The financial health of a company can be gauged by its ability to generate positive operating cash flow. However, the current situation for this particular company is concerning. According to the provided information, the company is experiencing negative operating cash flow. This trend is evident on multiple pages of the report, with page 15 and page 28 both indicating a negative operating cash flow status. The consistent presence of this metric suggests that the company's operations are not generating sufficient funds to cover its expenses, resulting in a net outflow of cash from its core business activities. Management is optimistic about the company's future prospects, particularly in China's ophthalmology field. They believe their ophthalmic pharmaceutical platform will enable them to maintain leadership and provide a world-class solution for unmet medical needs. The company expects significant clinical trial milestones, including real-world studies and phase III trials, as well as NDA submissions. Management is confident in the company's development prospects and plans to continue implementing established strategies for long-term value creation. They anticipate clear financial targets and profitability by 2026. To achieve this, they will accelerate R&D pipeline advancement, complete capacity upgrades, and capitalize on market opportunities for import substitution in China's ophthalmic pharmaceutical market. The company is also prepared to adapt to changes in accounting standards, with management anticipating no material impact from IFRS amendments, except for changes in financial statement presentation. Overall, management statements convey a sense of confidence and commitment to driving the company's growth and success in the ophthalmology field. The company's financial activities for the period under review were characterized by a lack of significant transactions involving the acquisition or disposal of assets. There were no notable acquisitions, which means that the company did not purchase any substantial assets or businesses during this time. This suggests that the company is focused on its existing operations and has no immediate plans to expand through external purchases. Similarly, there were no material disposals, indicating that the company did not sell off any significant assets or businesses during this period. This implies a stable financial position for the company, with no need to divest assets in order to manage debt or reduce costs. The company's financial strategy has been a topic of interest for investors. One aspect that stands out is the decision regarding dividend payments. According to available information, the company has chosen not to pay dividends to its shareholders. This means that instead of distributing profits in the form of cash dividends, the company has retained these funds within the organization. In addition to this, there is no mention of share buybacks in the provided summary. Share buybacks involve a company purchasing its own shares from the market, which can have various implications for investors and the overall financial health of the company. The absence of any information on share buybacks suggests that the company has not engaged in this practice. That concludes the financial summary for Ocumension Therapeutics. Feel free to comment below, and I will be happy to answer them when possible.